Welcome to Have an IPA with a CPA. We're here to share ideas to help businesses make more money and for owners to keep more of the money they make. Hi, I'm Paul Mueller.
And I'm Brooke Hupp. Paul and I are with Mueller Pye and Associates with offices in Loveland, Colorado and Katy, Texas. Today's topic is about employee versus contractor. This is such a important topic for so many of our business clients that we kind of wanted to take a little time to go over that today.
And it's a very troubling topic too.
It is.
But before we talk about that, let's talk about beer first. We're in the barrel room at the award-winning Liquid Mechanics Brewing Company in Lafayette, Colorado, and we each have our own favorites. What are you drinking, Brooke?
I am drinking the Pineapple Doughboys, which is a pineapple marshmallow sour. So it has that little sweet and sour mix going on.
And I'm not much of a sour fan. I really don't like the acidity of most sours, but this one's pretty nice with that marshmallow aspect. It just kind of smooths some of the edges off a little bit. And what I'm having is the jalapeno Helles. It's a traditional Helles beer. It's relatively low alcohol, 4.9%, but it's got that little bit of a bite of the chili jalapeno pepper. So let's give it a try.
Cheers. That's good.
I was gonna say, does that live up to expectations?
It does. The marshmallow takes a little of that sour off. That's
well,
so common in the sours, obviously.
Well, this one with the jalapeno substitutes for that with a little bit of bite and a little bit of pepper on the lips too. So it's really good. Yeah. So what on the employee versus independent contractor, as I said earlier, this is a troubling issue for so many of our clients. We get those phone calls all the time from a client that says, I'm getting ready to hire somebody. Should I treat them as an employee or contractor? Which is easier? Which one's going to save me more money? And as you and I know, that is not the question.
No.
That there are what business owners need to understand is there's 5 constituencies involved in this conversation. Actually 6. The first one would be the business owner, obviously, but then there's 5 outside parties that have a vested interest in this particular conversation. And the first one is the U.S. Department of Labor. They have a lot of wage and hour rules and regulations that if you get this wrong and you didn't treat somebody as an employee who should have been, you could be looking at back pay, back wages, overtime, all kinds of economic implications from a misclassification. Number 2 is the IRS obviously has a big vested interest in this particular topic because there's payroll taxes, there's the obligation of the employer to withhold income taxes. And so the IRS is all over this particular issue. Every state unemployment agency.
Especially now after COVID, when so many people.
Right. After all these employment agencies have paid out all these unemployment benefits during the pandemic, they're looking for ways to recoup those taxes. And so they only collect taxes on people that are classified as employees. So these unemployment agencies have a vested interest in that area. The other one is the workers' comp insurance coverage. The insurance company is going to want to make sure that an employer is properly classifying employees versus independent contractors because they're collecting insurance premiums for those employees. And then the 5th vested interest party is the employee. So, you may hire somebody as an independent contractor, they sign an agreement saying they're a contractor, but then things go crossways. And now you have a disgruntled former contractor who can then turn into a whistleblower and contact any of those 4 agencies that I mentioned and say that they thought they were treated wrong. And then that starts a whole bunch of conflict at that point.
As we always say, things are always great in those relationships until they're not.
Until they're not.
So
that's
absolutely.
Right.
So how can you tell which is which and which it should be? How does the business owner decide?
Okay, that's a fair question. Over the decades, the IRS, the Department of Labor, the courts, they've developed this thing called the 20-factor test. And you can probably Google search 20-factor test, and you can get like a checklist, and you can go through that checklist. It'll be a set of factors that indicate whether somebody should be a contractor or an employee. You can run the checklist and wind up with a score of 12 to 8 that says contractor, but that can be misleading because not all those 20 factors have equal weight. So what it really boils down to is 3 critical factors. One is who's scheduling when the person is supposed to be working, who's providing the resources to get the work done, and who's supervising the work while it's being done. So to kind of maybe compare and contrast, take a company that's looking to get a new logo or a new branding done for their company. They reach out to a graphic designer or marketing agency and they say, look, we need this new logo by 4 o'clock on Friday. After that point, the business owner typically doesn't care
They're out of it.
when they're doing the work, what tools they're using to do the work, or supervising the work. All they know is they want that logo by 4 o'clock on Friday. And in fact, the only control they have is judging the quality of that final product.
Right. As long as they get it by the due date, they're happy, and they're out of it.
And so in that case, obviously that graphic designer is an independent contractor. Go the other way. We're hiring a new staff accountant to come to work for our firm. We're going to tell them this is your office and your desk. We provide a laptop. We provide software. You're going to supervise some of the work that they do. We're going to tell them they need to show up 9 to 5 on Monday through Friday. So in that case, it's obvious that person's an employee because we've dictated all those three types of terms.
Now, another scenario to what Paul just said was, let's say that employee is only going to work 1 day a week. Does the hours that they work, only having 8 hours a week, make a difference? Absolutely not.
Absolutely
because
not.
we're still giving the computer, it's at our office, they're being supervised. So you can't just judge it on hours.
I was going to say, it's not based on hours. It's not based on the number of days they work. It's not based on whether they're part-time or full-time. In fact, there's some companies that have a probationary period. They may have a 30, 60, 90-day period before they officially onboard that person as employee. They are not an independent contractor during that probationary period because they're an employee just waiting, I guess, to be accepted as a full-time permanent type of hire. Yeah.
Correct. So should we get into reporting, get into the QuickBooks a little bit?
So somebody, and a business owner is hiring somebody, they decided definitely whether they're an independent contractor or a W-2 employee. What does it look like in payroll software on how you actually get this person set up?
Okay, so I'm going to jump, as we said, we're getting into QuickBooks here, and this is not one of our clients' QuickBooks. This is a sample company, so I like to put that out there. I'm going to start with the vendors. So you've hired somebody on, and you've gone through the case studies or the rules, and this is an independent contractor. You're hiring them to get the job done and get it done, whatever that is, but they're not an employee. First thing we're going to recommend is that you have them fill out a W-9 form. This is an IRS form that basically they put their name, their address, their tax ID number, and their classification, whether they're a sole proprietor, S Corp, whichever,
LLC, partnership, whatever it might be.
And we'll go through later in another video about doing 1099s and who qualifies for a 1099. And most vendors that are doing this subcontract or independent contractor work will qualify. So once
the other thing, the important thing about getting that W-9 now is that's the information you need in January when it comes 1099 season. So getting that information now is a whole lot better than trying to chase a bunch of people down in the month of January.
Absolutely. And honestly, we recommend that before you issue the first check, you get that W-9 so that you have it. I will tell you that come January 20th, when we're trying to get 1099s done, sometimes those vendors are hard to get. Some of the vendors are hard to get a hold of. They disappear.
Amazing.
So, yes, get it right away. So I'm going to open up in the QuickBooks. If you notice, I'm on the vendor screen. And I'm just going to open Books by Bessie because obviously they've hired someone to do some accounting work for them is what it looks like here. So if you go up here to this edit screen, it has this is where you put in all of Books by Bessie's information. And when you scroll down,
and by the way, that information like address and all of that could come right off the W-9.
It comes right off the W-9, as does this tax info. So it's going to ask you the tax ID number, and then you're going to click here. If it's a vendor that you think you're going to need to send a 1099 to at the end of the year, go ahead and click this box. And that's what's going to tell the software later on to help you with those 1099s. Now, let's say you wrote Books by Bessie a check, and she took the 1099 or the W-9 home. to fill it out because she didn't know her tax ID number at the time. In which case, if you want to go ahead and enter that check, go ahead and check the box right now. And you can add the tax ID later, but this gets it starting to collect
the data.
the data. Yes. So go ahead and click the data here, track for payment, and then you just hit save. And again, we'll have another video later about the 1099s. But
Because
do this step. This is the first step.
Just as a little headline, not every vendor gets a 1099, only certain
Correct.
ones, but we're not going to get into that today.
No,
We'll
that's
get
its own
into
video.
details on that on another video.
Absolutely. And so then when you get back here, is if you've decided that they are going to be an employee and you're using QuickBooks payroll, you would go in here to payroll and add them as an employee. Or if it's your very first employee ever, you would click the get started and sign up for a subscription for payroll, whether it be with QuickBooks or someone else. And if you are at that point, there's other steps as well, as Paul said, all those other agencies. So definitely give us a call. Let us help you out with that. To make sure you are getting your state account numbers and all that stuff that's needed.
So what's pretty cool is the software does all the work for you. Once you decide employee versus contractor, if you get the person set up right in your software, it's going to do all the reporting for you.
Absolutely. Yes. QuickBooks will do it all for you.
Yeah. Okay. Well, the big thing is, what if people get it wrong?
And that's what I was just going to say. Well,
right.
oops,
I mean,
what happens?
And that's what we're going to wrap up with. What happens if you get this
Mhm.
wrong? Well, let's say you have an employee that you classified as a contractor, and either they became a whistleblower or one of these agencies came out to try to challenge you on your treatment of that particular person. If it winds up that this person should have been an employee, think about everything that could have gone wrong. All your payroll tax deposits were wrong. All your quarterly payroll tax filings were wrong. Your W-2s have been wrong because you never issued that person a W-2. Your state unemployment filings are wrong. You think about all these agencies who now get involved in this misclassification. My experiences, and once you're found out about this, the IRS and Department of Labor, they have 3 years to go back. So if this has been somebody that was with you for a long time, it's not just the current year they're auditing, they're going back the whole 3 years. My experiences in these types of situations, it's not the tax you have to worry about that you should have paid. It's the penalties and interest that get layered on top of that. And I've seen situations where the actual assessment for a misclassification is 3 times the tax by the time you add up the tax, the penalty, and the interest. So it's a big issue, and we encourage our clients to give us a call when they're in that situation where they're unsure about how that person should be treated, and let us help you navigate the right situation there. So Brooke and I hope that you found this information helpful. We encourage you to go to our Have an IPA CPA YouTube channel, and when you're there, be sure to subscribe so that you have access to future videos that we're going to publish. And until that time, Prost.